Welcome back. Today we're doing a deep dive into something really crucial for trading the Nifty 50.
Mm,
How to avoid those really frustrating false breakouts.
exactly. You've given us some great background on your approach, especially around risk. So, yeah, our mission today is to give you a solid, practical guide.
A guide to spot and, more importantly, avoid these fake moves that can cost you.
Right. Because a breakout should signal a real move,
Yeah.
price pushing past resistance, but a false one. It just tricks you, then snaps back.
Ouch. And with the Nifty, it can be quite volatile, can it? Global cues, FII flows, DII activity, lots of moving parts.
Definitely. Those FIIs, the foreign investors, and DIIs are domestic institutions. They have a big impact. So spotting these false signals is, well, it's key for protecting your capital.
Okay. And this ties into what we've talked about before, like your comfort zone for the India VIX, maybe around 2022, and using tools like RSI and ADX.
Precisely. We'll build on that. So let's get into the steps. Step one is basically identifying a weak breakout setup right from the start.
Okay, what does weak look like in this context?
Well, you see the price nudge above resistance may be a key level or a trend line, but it just doesn't look convincing. The candle might be small, indecisive.
Like a doji, or one with a long wick sticking out the top.
Exactly. Shows buyers couldn't hold it. And crucially, check the volume. Is it low? Is it actually decreasing on the breakout?
So not much power behind the push.
None. It suggests there isn't strong conviction, not enough big players really jumping in. Think about April 15th, 2025. Imagine Nifty breaking 22,500 with a tiny doji below average volume.
Okay, red flag number one. Got it. What's next?
Step two is looking at the bigger picture, the market context, and volatility. Is the overall sentiment negative?
Like bad news globally,
Mm,
rate hike fears,
yeah.
FII selling off.
Yeah, all that stuff. And high volatility is the India VIX creeping up above that 2022 level you watch. That increases the odds of fake moves.
Hmm.
Also, what's the broader trend doing? If Nifty is hovering near or below its 50-day average and the ADX is weak, maybe below 25, that breakout is fighting an uphill battle.
Right. So back to that April 15th example.
Mm.
If VIX was high, say 23, and there was chatter about a potential U.S. Fed hike making markets nervous.
Then that weak candle breakout looks even shakier. See? It's not just the price pattern, it's the whole environment.
Okay, makes sense. What's step three?
Step three, check your technical indicators for any bearish warnings. Is the RSI screaming overbought, like above 70?
Meaning it might be due for a pullback anyway.
Exactly. Or worse, is there bearish divergence? Price makes a new high, but RSI fails to confirm, making a lower high. That signals weakening momentum.
That's a classic warning sign.
It is. Also look for weak candlestick patterns right at that resistance level, and check if there's significant overhead resistance just a bit higher up, more obstacles.
So on our April 15th Nifty case, if RSI was maybe 72 with that bearish divergence, and we know there's strong resistance looming near 22,700.
Yeah, the probability of that breakout succeeding just keeps dropping.
Okay, so we've assessed the setup, the context, the indicators. What's step four?
Step four is watching what happens immediately after the supposed breakout. Does the price actually manage to stay above that level?
Or does it quickly slip back below?
Right. Or do you see bearish reversal patterns forming right away? Like a big, nasty, bearish engulfing candle. And importantly, is volume still low?
Confirming the lack of follow-through.
Precisely. So if on April 16th, the day after our weak breakout attempt, Nifty falls back below 22,500 with a bearish engulfing, and volume is still meh,
Yeah, that's pretty much sealing the deal. Looked like a fake out.
which leads us to step five, the decision. And honestly, in most of these weak scenarios, the smartest move is simply to avoid taking a long position. Just stay out.
Protect your capital. Makes sense. Some people might try to fade it, right? Short it.
They might, yes.
Huh.
Fading involves betting on the reversal, so shorting or maybe buying puts, but that's a riskier play. Given your preference for lower risk setups, avoidance is usually the better path.
Got it. Prudence first. Okay, step six.
Step six is about confirming that your decision to avoid was right. Look for clear signs the breakout failed. Does the price close firmly below the breakout level?
Especially on higher volume this time.
Yes. High volume on the move down confirms selling pressure. Also, look for breaks below recent lows or other key support levels. And watch the VIX. Does it spike up?
So if on April 17th, Nifty closes below 22,500 with heavy volume, maybe breaks a near-term low, and VIX jumps.
Bingo! That validates the whole analysis. The breakout was false, and you were right to sit on the sidelines.
Okay, let's recap quickly then. Identify weak setups, candle, volume. Check the market context, sentiment, volatility, trend. Look for bearish technicals, RSI, resistance. Watch the immediate price action post-breakout. Decide to avoid, and then look for confirmation of the failure.
That's the framework. It's all about layering these checks to filter out the low probability trades, especially in a market like the Nifty.
And definitely keep an eye on those nifty specifics too, like the feedy flows and what global indices are doing. Adds another layer of context.
Absolutely. And perhaps a final thought for you. Think about how consistently applying these filters could shift your focus. Instead of chasing every little move, you're waiting patiently for the really solid, high probability opportunities.
Yeah, maybe even look back at your own trading log. See if you can spot past trades where applying these steps might have saved you from a false breakout.
Could be a very useful exercise. It's about building that discipline to wait for the A-plus setups.